Hey folks, Gary Dean here with Sentiment Timing, and this is our technical video report for Sunday, April 19th, 2026. Hope you guys are having a fantastic weekend, and let's get started. So, this move off the lows, I think it's going to be it's historic. I've never seen the S&P go up 11% in 10 days. It's not really sustainable, but can we go higher? Absolutely. There's a lot of people that were short this market. They got forced to sell. They got forced to buy, and this is the type of move that you get where it's just that things are going straight up without any type of pullback. But as I said, with anything that goes up or down, it's going to retrace. It's just a law of retracement. The question is from where is the big question. But we're looking at a daily chart because one thing that I've noticed with the matrix is that when we start seeing liquidity, a lot of selling or buying on the liquidity, but prices moving down or up, it's either panic selling or buying. And really what you have to do is move to a longer time period, meaning like the daily chart here. And you can see, so on the way down, we had some buy signals here on it. We came into our primary accumulation zone, and we had a buy signal here. So this was telling us that the market was looking for to make some type of reversal, and we got it. And now we're starting. This is the first sell signal that we've gotten on the daily chart. So we I'm expecting to get some backing and filling again. I would be probably just looking for a move down to the 690, to say the 698 in that range there. The trade that we took on Friday was the gap to new all-time highs, and that's just looking for a move down to the 702. Now, I know that the big rally was due to the news that the Straits were open, and by the end of the day, they were not open. So I don't know how the market's going to take this tonight. I guess we'll find out in when the futures open. They've ignored the last time with it. Maybe they try to do it this time. But the problem that I see is they use that news that everybody thought was going to be really, really bearish, and they trapped the bulls. Trapped the bears, and from that caused this massive short squeeze. So now that I believe the bears are out, I don't know, if they're going to get this sustained buying that we've been seeing. I don't know how many people are really short this market. They've probably gotten absolutely, their accounts got slaughtered. I've been saying, I've not been comfortable with the way that this market moved up, but every position we've taken was a hedge position, meaning it was going up or down. And as much as I was thinking that it was going to be the put side that made money, it was the call side that made money at each time. So right now we have that trade going into Monday, and it's really just the gap to new all-time highs, the fade trade. And again, that's looking for this gap to get closed within 3 days. So that would be a move somewhere down into that 701, 702 area. You can see we got these bearish divergences on liquidity. We have bearish divergences on our buy-sell pressure, and we have bearish divergences on our duration indicator. And from the what I'd really be looking for is if once this wave one completes, we're going to get a wave two. Now the problem is I do believe that we're still in the wave three of one. So what that would be looking for is 1, 2, 3 would be a move back down to either close this gap or come down somewhere into that 698 level, which would be testing this support. And then we would have another move up that would complete the wave one. And that's when we'd be looking for a little bit bigger of a pullback. And from there, once that wave two is complete, that's where you really want to just be long and just let your positions run, because the next wave three is probably going to take us into the summer, late summer, and we could see the S&P up another 700-800 points from there. So I'm just waiting for a pullback to be able to get long. And again, once this completes, that wave three that's going to hit next is going to be more powerful than this one. But the wave ones, when they go up like this, typically they do have a sharp correction. Maybe it is the news that the Straits aren't open again and that ships are turning around. Maybe like I said, the last time that we we saw this happen. They used it as a bear trap, but I think the bears are out, so I think they may have a little more trouble with that. And we're really going to have to just keep an eye on oil. So that's the 60-minute chart. Let's take a look at the 15-minute chart. Really the same thing. We've just been seeing selling. Not much on this one. You can see from the when we started making this run, we had some high ticket or high volume selling going on, but the market was just getting absorbed by the bears getting squeezed, and that just kept everything going up. But we did get one pretty much on Friday, and that matched up with on the daily as well. And you can see, but even this little pullback right here, we actually got some buying. So I think that they look like they're just consolidating right here. I would really like to see him come down and close this gap at the 702, 703 level, and then make another move up, and then that's where we'd be waiting for this wave one to complete. But if we head higher, 722 is actually the next move up on it, where it would be, but which would be another 120 points on the spider. So that's a big move. I think that they would need to see some backing and filling before they get there, but I thought they were going to be doing it before moving up 700 points in a matter of 10 days. So let's take a look at IWM daily chart. Again, you can see these candles are all selling candles, meaning that there's more buys being made at the bid than there are the ask. So it's really the velocity of the volume that's going in per candle, and we do have our first sell signal on it. So again, what I was mentioning is that when we get these really big moves, whether they're panic buying or selling, we got to move to a time period that's further out, meaning that your 60-minute charts are going to give you a lot of false signals on these, because your bears are getting squeezed and the price is just moving up. But when we look at the daily chart, this is actually the first sell signal we've gotten. And we're pretty overextended. We got our first sell signal on our divergence indicator. So to me, I would be expecting that we are going to see some backing and filling on the IWM as well. And our downside target on this one will be this gap right here, and that's at the 270.37. Looking at a 60-minute chart, again, it's been a lot of selling going on. The one dip that we did get got bought back up, and from there we just continued higher. But again, I think that some of these gaps are going to start getting closed, or at a bare minimum just coming down and testing support at the 267 before we see the next leg higher. And then we'd probably be looking at IWM to get somewhere up into the 283 and possibly up to the 292. But that may, heck, it might happen in the next couple weeks, or it may happen during that wave 3 up. So I am anticipating to see some backing and filling. We have been seeing a lot of institutional selling, but there's just more bears out there than there were bulls, and they were getting more bears that were covering than the actual selling was that was being absorbed on it. So again, on the upside, on a short term, you can see that we'd be looking at that 279 level and then the 281 as upside targets. This is our support levels right here, and that's at the 272.86 and then down at the 271. But again, I'm looking for this gap to get filled. That would be the fade trade, and really what I'm looking at right there. So let's see what plays out on Monday. Enjoy the rest of your weekend, and I will talk to you guys in the morning.